Hey everybody, how you doing? It's Uncle Bruce here from Stock Markets with Bruce. Welcome to my channel today. I wanted to talk to you about SoFi because I want to show you how can you possibly buy SoFi for only $5.43 a share when it closed last night at 7.58. That's impossible. How can we do that? There's a way it can be done, and I'm going to show you that today. Welcome, everyone. It's Saturday, January the 20th today, 2024. And I wanted to tell you a little bit about this company right here, SoFi, which is led by this individual right here, Mr. Anthony Noto. The company is only a few days away, a week Monday, from revealing their earnings numbers, their financials. They're going to tell us uh, on Monday, January the 29th, before the market opens, how they did for the final 3 months of 2023. And the company, SoFi, has said now for probably 3 to 6 months, they've indicated that they expect to release financials to all of us on the 29th of January that will show the company making a profit for the first time in its 12-year history. It's growing so quickly and has grown to now a point where the economies of scale have kicked in, and all the members that they're adding, the millions of members that they're adding to their business, that they're opening checking accounts, savings accounts, getting credit cards, taking out loans, trading on their platform, and all the other services they're offering. The economies of scale have now been broken beyond the profit line. And this will continue as they keep growing. There's no reason to stop at whatever number they have now of members. This is going to go much larger, probably grow exponentially. Their deposits on hand in hand growing. They're becoming a larger bank every month. Their rankings are rising, and they're going to be earning profits now going forward. So the first quarterly profit will be released to the world before the market opens Monday, Jan 29. So we have 1 week of trading left, 5 business days left to trade these shares before the earnings are released. And then we'll see what the stock does. Okay, let me show you what the stock has been doing. This is a 1 year chart here of SoFi. And on the far right, in that blue box, you see the number 749. Now, that is the last trade on the shares on the NASDAQ Stock Exchange at the closing bell Friday, yesterday. That does not show us what happened to the stock last night after the bell went, because we did rise to 758. But let's go back in time to a year ago. Look at this chart over on the left, and you can see how the shares were under the 633 number. They actually hit a low of 445 for maybe one day or so. The shares were not under $5 very long. That dip occurred. You'll notice that little dip just off to the probably the 1/3 mark of this chart. Is the lowest the shares got to. And then they quickly came back into that 6, 7 neighborhood, 8 neighborhood. They did try to get to the 9 neighborhood in July. Then they backed off again until, September, October. And then look at the spike that was hit in December. The stock breached $10. And here we are now at 749. Here's a chart for yesterday, just yesterday. And you can see where the shares during the day at 10 a.m., 12 p.m., 2 p.m. on the bottom, you can see the timeline. And the shares fluctuated from 721 for a low around noon hour to the high of the day, which was at the bell, just flirting with 750 a share. And that's where the stock ended up yesterday. After hours, it did trade 549,000 shares, and it closed at 758. Couldn't break 750 all day yesterday, but it hit 758 last night. And I'm getting the impression that Monday morning, I wouldn't be surprised. are trading between 750 and 775 on an opening, and we might go higher from there. But no guarantees, and we could be anywhere from 720 to 750 or 7 to $8 Monday and Tuesday. But as the week goes on next week and we get closer to the end of the trading week, Friday will be the last day to trade these shares before the Monday morning release of financial stuff the world is waiting for. Okay, now let's get back to the title of this video. How can you possibly buy this stock as low as $5.43 a share? There's one way to do it. And I will show you not only how it's possible you could get the shares for $5.43, but if you can't get the shares at that price, you'll earn a lovely percent return on your money trying to get this stock. It's a win-win scenario. What I'm talking about here is where you're going to write a cash secured put contract on the stock. And which one am I talking about? It's this one right here. It is the January 2025 $7 put. Now, what does that mean, Uncle Bruce? What does it mean when you talk about a put contract? When you are selling this put to create it, you are saying to the world, I am willing to buy stock from anyone who has this contract for $7 a share until January 2025, except that you have to give me cash up front for the privilege to sell me this stock at $7 a share. I'll give you until January 2025 if you give me $1.57 on this contract. $1.57 a share times 100 shares. Give me 157 bucks. I will be prepared to buy 100 shares at $7 a share until Jan 2025. This is what the closing price of this January $7 put contract was doing Friday evening. Now, if you take a look at the top left, you'll see the stock name, Sofi, Jan 25, $7 put. Below that, in bold numbers, $1.57, $57, up a penny on the day, closing Jan 19. Go a little lower. You can see the previous close of this contract was $1.56. It opened at $1.53. If you go to the right, you'll see the expiry date, 2025-01-17. Below that, the day's range was 153 to 167. Put contracts fluctuate with the stock. The bid, if you look at the left there, someone's willing to pay 157 for a put. Someone was asking 159 for their put. The last trade, 157. The volume was 793 contracts. The open interest, which means how many of these contracts are out there now? 27,950 approximately exist, and 793 traded yesterday. The strike is a $7 strike. On the right side of this photo, your image here, you're looking at the chart of the contract for the day. And as the shares went down in price earlier in the day, the put value went up. And then as the shares came up to 750, the put value came back down. And that's how this works. So if you were to be the writer of this put contract, you would receive $157 for every contract you were to write. How do you do that? What will it cost you? What's the world all about, Bruce? Help me. Well, let's get back to this chart over here so you can kind of see my reaction to everything. Again, at the very top, I've just blown up part of this page you were looking at a moment ago. At the very top, there's your contract, Jan 2025 $7 put. If you want to write this contract, in other words, sell one of these contracts, you need to put up $700 for every 100 shares. In other words, you have to show your brokerage firm that you can buy 100 shares at $7 a piece. Well, that's $700. The brokerage firm, of course, you will put your sell order in to sell this put, and you will get 157 back right away. You'll get $157 credited to your account, less any commissions your brokerage firm charges you. And that credit will be in your account immediately. And so deduct $1.57 from $7. And what do you come up with? $5.43. And that means if these shares were to drop in value under $7 each between now and January 2025, next year, the whole year, anytime the shares were to drop, you could find yourself one morning waking up, looking at your brokerage account and going, oh, my $157 is missing. It's not there anymore. But instead, there's 100 shares of SoFi in my account. Well, look at that. That means you've just acquired 100 shares of SoFi for $5.43. So theoretically, the shares could trade at 650, for example, and you could be exercised. You don't know. I don't know. But you could be made to buy the stock at 7 less the 157 you've got. And even though it's trading at 650, they made you buy it at 7 and your actual cost is 543. You're sitting there going, wait a minute, Bruce, my math isn't like superior quantitative type mathematics here, but if you're telling me that the shares are trading at 650 a share and I just got them at 543 net cost to me because I wrote this put contract, doesn't that mean that I'm actually up $1.07 right now? Because couldn't I just sell those 100 shares into the open market at 650? Because that's what they're trading at, and I would have $650 in my account um, rather than have these shares. And I'd say yes, you could do that. Well, Bruce, what do I do now? I've got this money. I made $1.07 on this trade. I made $107 for every contract that I wrote. What do I do now? Well, you could write a new cash secured put contract at that time, whether it's a $7 put contract or a 6 cash secured put contract, whatever value you want for any month you wish to write for. And you might go hunting for what contract can I sell right now to get about a buck 50, buck 60 in cash that is out of the money. So if I do get exercised, I buy it for way less. Like a $1.50 contract at 6 means I'm only paying 450 for the stock. Can I write a contract like yes, you can write a contract like that. It might be an October contract for 2025 or June for 2025, further out in time, but yes. But for today, limited time offer on Monday morning when the market opens up. If the shares of SoFi are somewhere around here, again, this is where we closed at last night. If they're around 750, 740, 760, somewhere in here, the likelihood is that the put contract will be trading around 150, 160, 155, somewhere around this neighborhood. And for every $700 you have, you can write one of these contracts. So if you've got $7,000, either in cash or in marginability in your margin account, you could write up to 10 of these cash secured puts, bring in $1,570 and say to the world, hey, you want to sell me these shares at $7 each? I'll buy them. But of course, right now it's 758. No one's going to give them to you at 7, but they might if the shares drop below 7. But then you're asking me, I bet you're sitting there going, Bruce, what happens if the shares go up from here? Now what do I do? And I say, you're going to do what most of my viewers are doing now. And that is you're going to be rubbing your hands with glee or crossing your arms going, I'm getting rich. Why is that? Well, you were paid $1.57 in this example for this put contract. And the stock was $7.49 a share at the time or so. What if the shares go to $8.50? They don't have to go to $1 million. They go up $1. They were at 10 something 2 weeks ago. What if they go back to $8.50? Now what? Well, the good news, my friends, is no one is going to sell you stock at $7 a share if they're on the open market at $8.50. So in reality, you're going to look at that put price up there, that 157 put, it isn't going to be worth 157 anymore. The shares go up $1. These put contracts will probably lose 80 cents of their value. They'll be trading at 77 cents each. And as each day goes by, they lose a little more value because January 25, they expire. This is a limited time offer you're making to people. But if the shares in, say, a week or two are 850 or even 9, these contracts could be down to 50, 60, 70 cents each. You can, anytime you want, anytime you want. Once you've written them, you can buy them back on the open market and keep the change. So if you buy these back for $1, let's say, you sold them for 157, you buy them back for $1, you made a 57-cent profit per contract. That's $57 times 10 contracts, you made $570 on your $7,000 commitment. If you buy them back for $1 less at 57 cents, you end up making $100 a contract for every contract you wrote times 10. You made $1,000. $1,000 on a $7,000 risk in, say, 2 weeks, a month, 2 months, 3 months. You do the math. If you can make 15% on your money in 1 month, that on an annualized basis is huge. If it takes you 6 months to make 15%, that's like 30% a year. That's still way better than a savings account. You don't own SoFi. You don't want to own SoFi. You just want to profit on the upward movement of the stock, or you will become a shareholder if the shares drop enough and you get exercised, and now you're paying $5.43 a share net to you on this example right here. That's how this game works on the cash secured put business. It's kind of fun. So there are viewers of mine who don't write one contract or 5 or 10. Many do, but there are viewers of mine who write 50 of these at a time, 100. If you have $70,000 and you want to risk buying SoFi at $5.43 a share, you can write 100 of these contracts. You'll get paid $15,700 up front. The money's in your account. You can do whatever you want with that money. Of course, that's 15 grand against your 70,000. So you're net into this trade for $54,300. 543 times how many contracts? That's how cash secured put writing works. This is an opportunity that many investors have been taking advantage of and are sitting there now with their arms folded going, Bruce, I follow your channel. You're live every day at 8:30 in the morning Eastern time. I watch you for 2 hours live every day. I know you love the SoFi shares. I'm with you. I love them too. They're going to earn a profit. They're going to report a profit on Monday, the 29th of January. They're going to report another profit 3 months later. They're going to report another profit 3 months later because they're growing. They're getting larger and larger and larger. And so their profit per quarter will now be rising. 1 year from now, SoFi shares will have had 4 consecutive quarters of earnings. That qualifies the stock for possible inclusion into the S&P 500 index because their market cap at $10 a share, for example, puts them well into the large enough corporation category and profitable to be included in the S&P 500. If these shares go to $20 a share, this is a $20 billion market cap company. That would put them in the top 400 largest companies in America, maybe the top 350. And they're profitable. They're going to be in the S&P 500. That happens, every mutual fund, pension fund, hedge fund, ETF fund, and many institutional investors will be buying these shares for long-term holds because it's only a matter of time when they reach a certain profitability factor per share, then they start to pay dividends to their shareholders. That qualifies this stock into all the dividend funds out there. This forward motion just keeps going and going and going. I'm talking now a few years down the road as well. That's why SoFi is loved by many. But at the moment, it's still under $10 a share. There's a week to go until they report their first reported earnings. And these put contracts are trading in this 157 neighborhood. And so it's up to you whether you want to take advantage of this trade or not. There are many other put contracts out there to look at. You can join me Monday to Friday for our opinion on what's going on. My channel is filled with option writers. So if you want to become an option writer, join me Monday to Friday, 8:30 Eastern time. You can become a member of the channel. I have 17 classes available on how to become an option writer. Head to my website, stockmarketswithbruce.ca. Here's my website. You can go here anytime you want, and you can check out the various classes I have. take one at a time. Here's my web page. This is what my web page looks like. And here is what the classes look like. You go to the class link right there, and then you go to class number 1, class number 2, and you can go all the way down the line. Each class is $150. They're about 2 hours long. You can watch as many of these as you want, whenever you want. You can watch them again and again and again, 3 and 4, 5 and 6, 7 and 8. There's all kinds of classes here about the psychology of the markets, how options work, why they go up, why they go down, spreads, poor man covered calls, cash secured put trading, rollover strategies. You can even book a one-on-one private consultation with me if you like, and we'll talk about your trading situation. It's totally up to you. Lesson 15, lesson 16, lesson 17. You're more than welcome to join us whenever you wish. I hope you enjoyed the video today. Sofi shares at 543. Boy, I like that deal. Let me know what you think. Thank you for the thumbs ups on all my videos, and we'll talk to you next time, everybody. This is Uncle Bruce saying bye for now. Have a great day.